From here, the multiplier is probably more like 20. So for every dollar that gets converted to Bitcoin, the market cap will increase about 20. That means we're at gold equivalents. That means the price is somewhere in the $350,000 to $400,000 range.
Good morning, good afternoon, good night, wherever you're tuned in from. This asset class, this world, crypto, it is everywhere and it's nowhere at the same time. Some people are still behind the curve, but I'm about to bring on one of my favorite voices in this space because I wish I could be as articulate as this man. I can't even say the word articulate, you see? But he has a great understanding of what's going on in this market. He's been investing venture capital in a number, dozens and dozens of projects that you would even know about outside of crypto before this. But he's my favorite guest I've ever had on. And I'm just going to throw it straight in to Mr. Mark Yusko. How you doing? Thank you for being back.
No, doing great. Thank you for that kind introduction. And always enjoy our conversations and excited to be here with you again.
So I'm just going to get right into it because you are doing 703 things any given moment, managing all the different projects you're involved with, as well as being such a active participant, as we were talking about before the show started. You know, how much value we like, not only that you need to give, but we want to give to get people on the right side of understanding what's happening here. So I'm going to start here with your Twitter profile, because your Twitter profile, as everybody can see right here, at the top, it says, just buy it. It says, Mark W. Yusko, hashtag 2.1 quadrillion. So before we dive into this, what is the 2.1 quadrillion?
So 2.1 quadrillion is the number of Satoshis that exist in the world. So there are 21 million Bitcoin. Each Bitcoin can be subdivided into 100 million parts, Satoshis. And so there are 2.1 quadrillion, it's a big number, lots of zeros, individual units. And, one of the things that I think will eventually happen is the price of Bitcoin will become so large that just mentally people will have a hard time. Like, well, I can't afford $1 million or $2 million. Well, you don't have to buy a whole Bitcoin. You can buy 1/100 millionth, a single Satoshi. You can buy 10 Satoshis, 20 Satoshis. And ultimately, I think the Satoshi will be the unit of measure when we get to, I see the book behind you, when we get to the Bitcoin standard, meaning that Bitcoin is a better form of money. What is money? Money is an asset that exists in the absence of a liability. There's only one in the whole world, that's gold. Everything else sits on top of gold in the monetary system, which is currency. Currency is what we use as a medium of exchange, belief, custom, and nation states issue it backed by debt. But gold doesn't have debt associated with it. And gold is ultimately being displaced by Bitcoin, this better technology, this better form of money. Well, what makes it better? Well, it's equally scarce, meaning the amount that exists relative to the new flow. If you think about gold, the reason it's been so great for so long, a single ounce of gold is still a single ounce of gold. It doesn't change. It's an inert metal. And what's more important is the value of that gold has held its value for about 5,000 years. You can go back to Cleopatra's time, exchange your ounce of gold, you get a fine person's suit. You go to the medieval days, you get a suit of armor. You go in the 1920s, you get a zoot suit. You go to Savile Row today, you get a fine person's suit. And so, but why isn't gold then going to go on forever? Well, gold suffers from two defects. One, let's say I had a bar of gold under my desk, which I don't. Like if I was Kyle Bass, I actually would, but I don't. If I had a bar of gold, and look, I think I'm a reasonably fit guy, but I could not break that bar of gold. But let's say I could. Let's say I could divide that gold in half. It'd be really hard to get it precisely in half. I couldn't stuff it in the computer and send it to you, Kelly. So here's the thing. All the Bitcoin in the world fits right here. Now I don't have any on my phone. Don't SIM swap me. I don't keep it on my phone. I keep it in cold storage, so you can't steal it. But if I had any amount on the phone. With a couple clicks, I could send it to you. Now that's interesting because I don't need a bank account. You don't need a bank account. We don't have to pay fees for a wire transfer. So Bitcoin is more portable, more divisible, and importantly, the scarcity, the amount of stock relative to the flow. So in gold, the amount of new gold that's produced every year roughly equals the amount that's used up in industrial uses or lost or stolen. So the stock to flow ratio is very high. That makes an asset scarce. Think about collectible Porsches, right? There aren't very many old Porsches. Why? They call it the dentist wrap phenomenon, which is not very kind, but true. Yeah. Dentist buys Porsche. No one tells said dentist that you can't accelerate and turn the wheel at the same time. The wheel has to be straight if you're going to accelerate. Otherwise, you wrap around the tree, hence the dentist wrap phenomenon, end of Porsche. So all the Porsches get destroyed. A few become scarce. The stock relative to the flow, very high. Same thing with Bitcoin. The amount of new Bitcoin that's produced is decreasing. The amount that's lost or stolen is relatively consistent. So the stock relative to the flow, as of this halving in 3 weeks, will actually be higher than gold. So it'll be more scarce than gold, more divisible, more portable. So it will displace, I believe, over the next 5,000 years, physical gold. It will become the base layer of money. You know, think about it. I don't know about you, but I don't carry money. I don't have cash ever. I use a little plastic card. And once a month, I settle up using ACH and L3 down to the L2 Fed wire, down to the base layer gold. Now, I don't go to the central bank, but the bank does. Bank of America uses Visa, and I get to, buy and sell things using not money, which is gold, but this transaction system. Now, the problem with it today, the Visa network sits on COBOL code.
What is that,
not 70s or
something? Yeah.
Yeah. I mean, it's 70-year-old technology, 50-year-old technology, horrible, but it'd be too expensive to change it. Now we have this better technology, Bitcoin, blockchain. Bitcoin is just a blockchain. It is an application of blockchain technology. And blockchains are the new form of compute. So in the old days, we had mainframes that ran on COBOL and Fortran. Then we went to personal computers that run on DOS and Windows. Then we went to supercomputers in our hand that ran on iOS and Android. Now we will have blockchains, which run on these decentralized networks that become global compute. And the application of money into that global compute is the first great use case.
I'm glad you
mentioned a long answer for 2.1 quadrillion, I know.
But no, it's important. Even anybody out there watching right now, one of the number one tenets of anybody I've seen successful over time in any asset class and any venture ever is patience and humility. And sometimes we think we understand systems and we don't. The more you understand it, the more you can not only navigate it, but you can harness what it does by seeing where new narratives are emerging. And we're going to get to that here in just a moment. But I wanted to bring up what you just mentioned about talking about blockchain, but also taking it back to this money layer that we're all used to using, fiat and this digital systems that almost, I don't know a person in the Western world that hasn't used a debit card or a credit card. And one of the most common pushbacks I get from people that are new or somewhat against or ignorant to what Bitcoin and blockchain are is, but I don't understand it. I say, great. Tell me how your credit card works. They can't, right? Tell me.
No way.
Yeah. So nobody knows really. It's not, the argument isn't, I don't understand it, so I can't use it. It's ingrained in us to use fiat, so much so that we cannot, even me being in the space for 7 years, sometimes I still cannot fathom, because our brains as humans don't do this. We cannot extrapolate exponentially in our brain. It doesn't work. Our brains do not compute that. So we don't understand, one, that this is trustless, because that's so far out of the concept of any governance we've ever had ever. And two, that it's not just made out of thin air. I mean, you're driving your car. Everything you use is produced with petroleum. Everything we do is about harnessing energy, from eating to transmitting that into energy for our body. We need to get more people to understand that this is a means of storage of energy, and you can choose to use it as a store of value or as a transactable. And I love that you were talking about the Satoshis, because I've been mulling this over in my head for about a year or more. At some point, there's going to be a narrative, and this can kind of take us into our next part, the next question here. There's going to be an ecosystem built around the exchange of Satoshis. Yes, every exchange that you buy Bitcoin on, technically you're exchanging Satoshis. But once we get that true tipping point, and it's been well established, and we have basically run beyond it, you're right. Once we get up to 500,000, a million, 3 million, who knows when it's going to be, there's going to be direct exchange points and access points that you buy by the number of Satoshis, not by the decimal of Bitcoin. And that's going to be an important access factor, much like the ETFs are for easy capital access outside of the Bitcoin network, right? But the Satoshis is going to be the next step, I think, for ease of access on the psychological level, because, I can get 10,000 Satoshis.
As you described, humans are captive to their experience. So I'll give you a couple of examples. So my dad, 85, about to be 86 years old, doesn't have an ATM card. Right. You know, like, what do you mean? What do you mean he doesn't have an ATM? He's never used an ATM. He doesn't trust it. He wants to go into the physical bank branch and get money. I haven't been in a bank branch in years. Why would anyone do that? So my 1-year-old granddaughter will never have one of these. She will never have a leather wallet. She will never use paper money. She won't even know what it is. So, but here's the thing. What is money? Money is simply a ledger. Think about it. For thousands of years, there was no money. People had stuff. You had cows, I had chickens. We met at the market and we exchanged cows for chickens. Or maybe you came and worked on my gutter and I came and worked on your thatch roof. We exchanged. And then someone said, bringing your cows and your chickens to market, it's bad for the roads and it's a hassle. And so how about, Mark, you mint some coins with cows on them, and Kelly, you mint some coins with chickens on them, and you bring the Sacco coins and you exchange the coins, and then you can cash in the coin for the thing. Okay. But then those bags got really heavy, and on the way you could get robbed, and they could take your coins, and then they could go get cows and chickens. So they set up these banks that you deposit your coins and they'd give you a paper record, a ledger. Okay. But it was one-sided, because in the olden days, and I'm super old, so I would lend you money and I would write it on my papyrus tablet, because I'm super old, at least not quite as old as
great font.
But papyrus. And I say, Kelly owes me $100. You go away, you work for a year, you come back with $110 plus interest. And I, being an unscrupulous person, change the 100 to 200. And you go to pay me back 110. I'm like, Kelly, you owe me 220, bud. And you're like, no, I only borrowed 100. Hey, the book, the ledger says 200. You had no ledger. So 838 years ago, the Medicis said, you know what? That's a bad system, because Mark's not a very good guy. So Kelly, you keep a ledger, and Mark, you keep a ledger, and we, the benevolent Medicis, for a small fee, will make sure the ledgers match. So you write down 100, I write down 100. But in the year, I'm a bad guy, remember? So I go to the Medicis, I say, guys, I'm going to change mine to 200, and I'll give you half. So you get 50, I get an extra 50, Kelly's none the wiser. So you come back to pay, you say, here's your 110. I'm like, no, 220. And you say, hey, Medicis. And they're like, Kelly, you must have written the number down wrong. I'm sorry. Because they were corruptible. The whole system is corruptible. But one day, this guy named Scott Stornetta, he's actually a venture partner of ours, was sitting around thinking about this problem, right? If there are two people in a transaction. You need a third to make sure that it's an honest transaction. But then you need a fourth to make sure the third doesn't cheat. Then you need a fifth to make sure the fourth and the third don't cheat.
It's corruptible.
So you need everybody in the world. So you need a chain of blocks. So in 1991, he coined the term blockchain and said, I have a better system. Now, Kelly, you write down 100, Mark, you write down 100, and this system, this permanent immutable ledger will write down 100. Now, we don't have to trust the Medicis. We don't have to trust each other. We trust code. Think about it. You get lost. Do you ask someone for directions? Hell to the no, not here in the South, because they'd say, go to where the oak tree was, then go to where the general store used to be and take a left. I'm like, I don't know where the oak tree was. I don't know where the general store used to be.
Yeah.
I'm here now. So you don't ask directions. You go to Google Maps, Apple Maps, you get to where you're going. Same thing with this. Why do we need to trust JP Morgan, Deutsche Bank, et cetera? Turns out they're kind of bad guys and gals. They get fined a lot, billions and billions of dollars for doing the stuff like the Medicis. So now we're going to have this trustless world based on truth. There is one fundamental truth in a triple entry accounting system, so we don't need trust. And here's the big idea, and this is the idea that just blows people's minds. That trust industry, banks, brokerage, insurance, title, all the things that allow us to exchange value between humans who aren't trustworthy, $7 trillion per year, 6 to 8% of global GDP is extracted from us for that trust. Now, blockchains and Bitcoin in particular blow that up, and we liberate, my favorite word, we liberate that $7 trillion. And what do we do with that $7 trillion? We can channel it for the most powerful force in human history, human creativity, ingenuity. And so all of that money is now going to get recycled into the ideas that we have time, because we don't have to worry about trusting each other. We don't have to worry about trusting the bad people that are going to steal from us or, do bad stuff and take our assets. It's amazing, truly amazing.
I love talking with you, Mark. I really do. I've got a couple more questions. I know we're both on tight schedules here, and everybody out there, if you're watching, this is your first time here, definitely make sure you hit that like button and subscribe. And also wanted to shout out also Mark's Twitter page here at Mark Yusko. He's sharing a wealth of information. He's the type of person that anything he retweets, I'm like, I better go follow that person because he's probably got a good mind on him if Mark's retweeting that individual. So we got to talk right now. We just had what I think is some of the most impactful news stories and fundamental changes to Bitcoin in terms of access with these Bitcoin ETFs, not only approved, but launched, capital flowing in. So I have a couple questions about that because we've already seen around $86 billion from institutional investments coming in the last 6 months. But I think, do you feel like, as people that are like Hawkeye analysis watching these new data points, do you feel like, and I'm not talking price points here, but strategy, do you feel like being so Hawkeye focused on the ETF flows is a direct relationship to what's going on with the Bitcoin price? Or do you feel like it's still more of the derivatives and futures market? Or is it now everybody's trying to figure out what the impact is because it's a new playing field?
Yes, and yes. So what I mean by that is I say all the time, questions are more important than answers. I'm full of answers. I like to talk. I always go too long. But the genius in conversation is the questions. And you just asked a 3-part genius question. So one is, what's happening to flow? Well, the demand for Bitcoin just inextricably rose. So if you think about, aggregate supply and aggregate demand, right? We just had a shift outward, an increase in aggregate demand, which means P0, P1, P0, P1, the price is where those two lines intersect. P1 is higher than P0. So whenever you have a limited supply asset, Super Bowl tickets. Why was this Super Bowl the highest price ticket in history?
Small stadium.
Because of freaking Taylor, right? And so, and I shouldn't call her freaking Taylor, but because of Ms. Swift. So everybody was talking about, so it became limited supply, smaller stadium, and ultimate demand. So price goes up. Okay, great. So that is a change. Well, what happened? You took a pretty mediocre to poor, I won't call it horrible, but a mediocre to poor UI UX, which is buying and selling Bitcoin. It's not as bad as it was 15 years ago, where you had to go in the back alley and meet somebody and there was wrench risk and it was really dodgy. Today, it's better, but if you're not a techie, we talked about this before we went on, if you're not a tech, I mean, I had trouble getting my stupid Zoom to work because it doesn't like the Brave browser because the pop-ups. And so anyway, but the UI UX is meaningfully bad. So my 86-year-old dad is never, ever gonna hold his own keys because then he doesn't own Bitcoin. You tell my dad, who owns the ETF, that he doesn't own Bitcoin. It goes up the same as Bitcoin. He can spend it just like Bitcoin, but he's not self-sovereign and he's still Yep. That's called CeFi. It's not TradFi. It's not DeFi. It's CeFi, centralized finance. But because there's a whole bunch of people like him, okay, I'm the second to last year of boomers. My wife's the last year. So 60 to 85 is the boomers. They aren't going to hold their own keys. They're not going to have a treasurer or a ledger. They're not going to be degen. They are, however, going to call their financial advisor that control trillion with a T, $30 trillion. And they're going to say 1%. I want 1% of this Bitcoin stuff. So that's $300 billion. Here's the crazy stat, Kelly. That's more money than has ever converted into Bitcoin. There's less than 300 billion that has been converted from fiat into orange coin to make the 1.3, $1.4 trillion of market cap we have today because of the multiplier effect, right? The people who bought it for pennies on the dollar, like this whale who bought it in 2010 at 30 cents and just sold the other day, okay? He didn't put a lot of fiat, but he now has a lot of fiat.
I have to stop you here for a moment because I'm doing mathematical backflips of excitement in my head because I never really considered this. This is the most important thing I've ever heard in regards to what's going on with Bitcoin right now and any estimation whatsoever about where it's going. You're saying right now that only $300 billion has moved into Bitcoin since its inception. Of course,
220, 230. I don't know the exact number.
And the price is where it is now. And we're talking about, the 30 trillion with investment brokers. We also have registered investment advisors. I've heard somewhere between 100 and 120 trillion dollars or something like that. Or something ridiculous.
I mean, but some of that's not really under there. So let's just call it, Merrill Lynch, UBS, Fidelity, Vanguard, call it 30 trillion, whether it's 30 trillion or 100 trillion. If it's 100, then my numbers are light by a factor of 3. But
even if it's 1 trillion, if 1 trillion moved in now, that would be more than triple what's ever been put in, especially,
but then there's the multiplier. Kelly, there's the multiplier. Now, Bank of America says the multiplier is 118. Well, that's a historical artifact because, again, people bought it for 10 cents and it's now worth 70,000. That's not going to happen again. From here, the multiplier is probably more like 20. So for every dollar that gets converted to Bitcoin, the market cap will increase about 20. And that number will keep coming down so it's a moving target. But let's just use 20 for round numbers. So that 300 billion turns into 6 trillion. So we're at 1.2, 1.3 today. That means we're at, call it 7 trillion, which is roughly equivalent to gold, the monetary value. Now, there's the other part of gold that's jewelry and chalices, that doesn't count. The monetary value in the central bank vaults is about 6.5, 7 trillion. We'll round up to 7. So that means we're at gold equivalents. That means the price is somewhere in the $350,000 to $400,000 range. And again, people's minds start to melt. And then we go to Satoshis, and it feels much better because it's not $400,000 per coin. It's point something dollars per Satoshi. So all of that's going to happen. But then you have the supply change. So the second part of the equation is 3 weeks from now, whether it's on 4/22, 4/21, or 4/20, everyone's rooting for different days. I wish it was Earth Day. That would be kind of, slap in the face to all the FUDsters. Yeah. But other people want 4/20 for other reasons. Whatever. Doesn't really matter. On one of those 3 days, it's going to happen that we have. So we go from 900 Bitcoin a day to 450 a day. Well, every day, 7,300 Bitcoin are snatched up. Well, there's only 900 produced, and we're about to go to 450. Where's the rest come from? Hodlers. Well, people say, I'll never sell. Yes, you will. Because
there'll always be somebody that will. Yeah.
But when do you sell your savings? Not every day. You don't use it to buy a cup of coffee. Your savings, you save. And every once in a while, you take a little bit out to pay tuition or vacation or, start a business or whatever it is. Bitcoin is your savings account. And over time, when the price gets high enough, you'll take a little bit out, convert it to fiat to live your life until such time as 30, 40, 50 years, however many, when my Zoomer granddaughter, who's 1 today, is an adult, she will live in a world where maybe there are no fiats. There are no nation states. Now, the nation states are going to fight like hell to not have that happen, but it's certainly possible. And the thing about investing, the only way to really create wealth is to invest in something that you believe in before others understand. My pin tweet on Twitter. And when you do that, you have to imagine the unimaginable. And you have to be willing to be chided and teased and criticized and ostracized for your non-consensus action. And it's totally worth it. And so it doesn't mean you need to shift all of your wealth today, because we don't live on a Bitcoin standard. We still have to pay our bills in fiat. We still have to pay our rent in fiat. We still have to pay our mortgage in fiat. We have to pay our taxes in fiat. So we're going to have some balance. And over time, we will have systems where you can borrow against your Bitcoin, right? You borrow against your savings. People do that all the time in their brokerage accounts. They borrow against their stocks so they don't have to sell their appreciated assets and pay the tax. So all of these things, as we go from TradFi to CFi to DeFi, and whether we build it all on Bitcoin, right? Bitcoin, layer 1, safest, most secure network in the world. And L2s, we got more L2s. Lightning didn't quite cut it, but there are new L2s that are looking pretty interesting. Maybe get L3s and L4s. But remember, all we're trying to do is replicate Visa, ACH, Fedwire, Gold. Once we replicate that, then we're in the digital age. And that's the cool end zone.
You just, I love these conversations with you. And thank you for, as bullish as I am, this is why it pays to be humble and always have these conversations. I want to challenge everybody out there watching right now too. You don't just need to orange pill people. Even if you think you're orange pilled, seek more knowledge from others, always. It'll also give you more, I don't want to say ammunition, but more stock to draw from when you are having hard conversations with people that don't understand. And sometimes they won't, and it's not your job to convert them. All you can do is plant seeds. So you just tailored it, the conversation directly to where I wanted to go. DeFi is an absolute monster behemoth, on the ecosystem of not only Ethereum, but, the entire rest of the L1 platforms out there. And so in some ways, one could suggest or posit that we have an entire roadmap that I won't say is done, but the architecture and the framework is for better or worse, established, and we know that it works, and there's interest there. as Wall Street is now getting involved and institutions are able to get involved and the fair value accounting, I mean, the list is incredible right now with all the foundational shifts we've had and these ETFs and Wall Street starting to open up. You just went to Bitcoin Investor Day in New York. I'm curious, two questions around this. Are you starting to feel with Morgan Creek Capital, your company, as well as, the Investor Day that you went to, are you starting to feel that their appetite and the awareness or even questions, the curiosity from the institutional side is truly there and starting to pick up? And then I'll ask you the second question after that.
No, it's starting. It's got a long way to go. This was a meaningful collection of curious institutional investors. They were still the minority. The bulk of the people were already orange pilled. There were already, lots of degens and other Bitcoiners, maxis. So it was great. And, applause to Pomp and Will for putting it on. It was a great event. All the OMGs were there, us old macro guys, me and Mooch and Tapiero and Novo. And so what's interesting is we're all the same age. We all came at this from the macro side. We saw it and we couldn't unsee it. We're not the youngsters creating it. Yeah. We're not the computer scientists. We're the guys who have been trading currencies and stocks and bonds and derivatives forever. And suddenly you see this macro movement and the light bulb goes on. And once the light bulb goes on, once you see that Bitcoin is the first application of blockchain, and blockchain is simply an extension of compute, and the compute is the most powerful and most valuable resource in the world. And we're seeing that with AI and all the other things. Once you see that, you can't unsee it. And so, look, I've been trying to, quote unquote, orange pill, but not selflessly. I was trying to get paid too. So someone tweeted a picture while I was at the event that in 2019, Pomp and I went out to Santa Barbara, California, and met with a big pension fund. And we met with a bunch of funds that week, a healthcare system and a couple state pensions. And we made them a simple a proposal. We said, hire us to manage Bitcoin for you. We'll charge you no fees until you make 3 times your money. Then we get 30% of profits. You keep 70%. 0 takers. The price was $6,000. So it would have been really, really good for those pensions to do that. And we made it a no risk proposition. If it doesn't work, you pay us nothing, right? But the problem was they all saw at the time it was going to 0 because they didn't understand that there's never been a technology in the history of technology that once it got to critical mass went to 0. It doesn't happen. So now some of those people did come, but the real problem is a whole bunch of them were like, oh, I missed it. Now I can't do it because it's too late. Yes, the national anthem has been sung. The game hasn't even started. This year, 2024, is year 1 of the 14-year cycle. 54 mainframe, 68 microchip, 82 personal computer, 96 internet, 2010 mobile net, 2024 truth net. This is year 1. We haven't even really started the game. And so we need more education. And someone said a really high compliment I got. They said, Yusko, you're not an influencer, a crypto influencer. You're a crypto educator. Mm-hmm. Like, yeah, bring that. That's what I feel my role is because my mom gave me the gift to gab where she said she could talk to anyone, anywhere about anything. Okay, good. So I can speak. But I also, to your point, again, this was the insight that you just shared. The only way that you can have conviction and confidence against long odds and high volatility and all the haters is do the work. Once you do the work and you overcome the natural skepticism, look, on myself, I was introduced to Bitcoin the same month as the Winklevoss twins. They're multi-billionaires and I'm not. Why? Because they were less skeptical. They were younger. They were less ingrained. I had an old guard business. I didn't want to piss off my clients. I didn't have time to do the work. But once I did the work, and I wrote about this in 2017, I called it the digital gold rush. I had my eureka moment, not making this up, Kelly, in Eureka, California. And once that light bulb went off, it was over. And so the more work you do, the more conviction you have. And then what happens? Every dip is a buying opportunity. Because once you have the conviction, you're buying more of something at a cheaper price. And every day below fair value is a gift. When it gets above fair value, you have to hedge and you have to risk manage. But today, fair value, 52, 53,000 on the halving, that fair value doubles. Now, I don't think it'll double this time because ordinals allow for transaction fees. So that'll lower the fair value probably to call it 80,000. We'll blow right through fair value again, and we'll go to probably double fair value this cycle. And at that point, investors will hedge or trim, and we'll wait for the inevitable next cycle to buy when it gets below fair value. So that fair value will keep accreting. We'll probably go to 150. Fair value will get to 100. We'll drop probably all the way down to 50 or something. People will be saying it's the end of the world. That's when you want to buy lots. But for me, it's why the top of my Twitter page just says, just buy it. So I'll leave it this. So I'm going to do CNBC tonight at 5 o'clock. And in 2018, I was on the same show with Melissa Lee. And while I was on the show, I'm only on for like 6 minutes, but while I was on the show, the price went from 10,000 to 8,000. Like it fell 20% in 6 minutes. And people were like, oh my God, what should we do? I buy it.
Buy.
Like, oh, you'd always say that. Like, yeah, I would. Buy it today, buy it tomorrow, buy it next week, buy it next week. Don't buy it all at once, but accumulate over time an amount of ownership of the most powerful computing network the world has ever seen, and you'll be happy.
I love it, Mark. And everybody out there, make sure you check out his page. I'm going to leave you with one question before we go, just because I kind of alluded to it earlier. The behemoth of the DeFi space, it's already built out in some regards on Ethereum and all the layer one solutions. We're starting to see, I'm starting to see, and I know you are as well, you alluded to it, this BRC20 narrative, the DeFi, the finance on Bitcoin. I'm very much in support of that, and I think it'll be good. But do you feel, is it going to be the behemoth to where, because we have so many more users on Bitcoin than we have on any other network, right? And it's established. Is it going to be something that Wall Street is going to be more willing to participate in, or are they still going to be primarily just holding Bitcoin?
Look,
like, should we have our eyes on the specific,
ordi
swap and ordinals
Ethereum has a larger installed base. There's more developer activity. There's more quality developer activity. That doesn't mean the Bitcoin developers are less quality. Some of them are more high quality, but there's a lot of quality development going on in Ethereum. So I won't even compare the two, but there's a lot of quality in Ethereum, and Joe Lubin and that crowd is very tight with Wall Street. So there's probably an inside track there. That said, those of us in the institutional world look at Bitcoin and understand that it is the most secure network the world has ever seen. It is where I do believe all things of value will eventually settle to that chain. The Mona Lisa will settle to that chain. My PFP is going to settle to that chain. Things of value, and mine's not as valuable as the Mona Lisa, but my point is, anything that you think has value, you're going to want to settle to the most secure chain.
Yeah.
The problem with ETH is you're not settling on chain. You're settling to a pointer to an AWS server somewhere that can be taken away from you. I don't like that. I want to settle on chain. And as the world moves on chain, what's been missing to date was a scalable way to do DeFi on Bitcoin with stacks and other innovations. maybe we're getting closer. There's last count 20 new layer 2s and 40 more in development. One L3, we need more. But as those layers get created, if you're given a choice, you know, the Lord of the Rings model, which is one chain to rule all chains.
Yeah.
I'm a proof of work guy. Without proof of work, you mentioned it, right? I believe everything in life, from what you and I are doing right now, we fueled our bodies. We're converting energy to value. Hopefully people find this valuable. Everything where you build buildings or, you know, build skyscrapers or, you know, make sure planes fly. Everything you do all day is converting energy to value. Most of it with fossil fuels. And we convert that energy because energy can't be destroyed. You can only change its form. Heat energy becomes light energy, right? It doesn't go away. It just becomes something different. So we can take that heat energy, turn it into a turbine, and then store it as value on a blockchain that's secured by a decentralized network. So it needs the proof of work, the proof of converting that energy to value to be of value. If you can just have a big stack and you can change the consensus, that feels less good to me. Yeah. But that's just a personal thing. So that's a long-winded way of saying, I think DeFi on Bitcoin has a very bright future. We're investing. I love ordinals personally. I just think it's amazingly cool because you go back in time and you say, well, there's space on these blocks. We could fill it up and have secure, actual on-chain inscriptions as opposed to pointers to AWS.
And you know what? The last thing about that is the fact that the people were arguing about this was congesting the network. And I'm thinking, if we're looking truly at a long time horizon, then we know that in about 120 some odd years, the last Bitcoin is going to be mined. This is the type of evolution within the space that's going to build in different types of mechanisms and revenue streams from fees and transactions and all this stuff that will keep miners on the network.
The only revenue is block rewards.
Yeah.
Then in 140 years, it's over.
There's no security.
Transaction fees have to exist. We have to have an incentive for the proof of work to continue. And that incentive will be these transaction fees. And look, as the value of the network grows, the percentage that you need of that gigantic asset to have a very nice living as a miner is a pretty small percentage. So it's one of the most elegant constructions and like I said, frameworks for compute and for truth, right? We're replacing trust with truth. It's amazing. And that's why I always say Satoshi Nakamoto, they say whoever he, she, they, but he identified once as a he, so it's probably a he. It's like, it's hard to believe it was one he. Really is hard to believe. Now, is it 4? Is it 8? Is it 10? Is it a government? Don't know. Actually, don't really care. But the genius, the absolute genius of everything from the halving every 4 years to the way consensus works to proof of work, all of that is absolutely stunning. Now, could there be a development sometime in the future that makes this look like child's play? Sure. Imagine the unimaginable. Hard for me. I'll probably be long gone. But in the short run, this is as good as it gets.
I love it. Mark, thank you so much for your time. Is there anywhere people should be looking out for any things you got coming or anything you want them to check in on?
Mark Yusko, I'm easy to find. We also have at Digital Currents. So we just started a weekly show called the ABCD News Roundup, where we go through AI, blockchain, chips, and data. And that's got a YouTube channel. It's got a Spotify and a Apple podcast. So Digital Currents is out there, and appreciate the opportunity to catch up. Talk to you soon.
I appreciate you being here, and I hope you have a wonderful weekend. Bull run. I'm bullish. Are you bullish? We'll wrap it out with this. Are you bullish on 2024?
Well, of course I'm bullish. Look, I would say I was born bullish. I'm a bull. I'm a Taurus. So I was born bullish, but I'm a technology maximalist. And this is one of the greatest times to be that, because the technology and innovation that's going on right now is mind-blowing, whether it's AI, blockchain, chips, data. We live in the exponential age. And the great thing about exponential math and exponential growth is simple thing. Like, think about this. If I take 20 linear steps, I'm at the other side of the office. If I do 20 exponential steps, I get to high five people in China twice. You go around the world twice in 20 exponential steps.
This market's going to be exponential. We'll wrap it there, Mark. I appreciate you, and I look forward. Are you going to be at Bitcoin? I was going to say Bitcoin Miami. Are you going to be in Nashville for the Bitcoin conference?
It's Nashville this year, and I'm sad because it'll be the first one I've missed. They moved it to July instead of May, and that's when we're doing the family vacation to Italy this year. So I will miss.
Well, we're in these markets. Everybody watching right now, remember, we're in these markets not to count digits. We're doing it to help raise our standard of living, help other people, be with our families. So you go be with your family. I'll report back to you any good news that we see from the Bitcoin conference, and I'll see you later, Mr. Mark. Thank you again.
Awesome. Thanks, Kelly.
Thank you very much. Now, everybody, if you didn't hit that like button yet, subscribe to our channel. Make sure you also check out at Digital Currents right here. I'm showing it to you on the screen. Give this a follow. He's putting out a lot of great new content there. I've already been checking in on it. And of course, give Mark a follow here at Mark Yusko. And then last but not least, check out at Academy BitLab for our Twitter page. I hope you all have an absolutely phenomenal day. If you feel frustrated with something the market's doing, remember, that's an indication that there's more knowledge you can gain, because the longer you look out and the more knowledge you have a plan of action no matter what is happening in this space. So with that being said, we'll see you soon.